Hello, folks. Welcome to Market Trends with David Russell. I am the Global Head of Market Strategy at TradeStation. I'll just start off by showing you a few quick disclosures, as usual. It's great to be back with everyone. We do these every Thursday afternoon at 2 p.m. And we like to use the TradeStation platform to discover opportunities in the market, identify things that are happening, really kind of study the market in terms of the overall technicals and then the levels of sector, what's happening at the individual sector level, and then also things involving individual stocks and individual opportunities, especially when things um, may be interesting in the options market. So we like to look through all those different things. Thank you for joining me. And a reminder that when we do this webinar, you can first of all go to tradestation.com and then go up here and click on Insights. And this will then take you to a page that has there's our Market Insights blog. And if you go to this blog post right here, it has a lot of the key points we want to be talking about in today's webinar right here. So we're going to be covering things from this blog post right here. Also, I'm going to share a few disclosures with you very quickly in the chat. Okay. All right, so it's interesting as we are speaking, developed a bearish outside day on the S&P 500 to potential reversal pattern. However, the other thing to remember is that these things often can take time to play out. So there's been a lot of positive momentum, and with the overall market hitting a new all-time high today, this might be a situation where we get some period of kind of chopping and consolidation before this thing actually does play out more to the downside. Kind of looking at this to figure out, right now the S&P is down 0.6%, so it was up almost 1% earlier. And it's interesting coming into the day, we had some interesting patterns, and I'm going to show you how to kind of create this chart. It was very interesting kind of contrast of news because on one hand we got from Nvidia, of course, a strong quarterly report, but then at the same time we have continued drumbeat of strong economic news, and that is really kind of more weighing on the situation right now. So I'm going to start off. I want to show you this chart. It's an interesting sort of series of things I have on here. First, I'll just show you the standardized returns, some of the ETFs we might be talking about. We have the link to the disclosures um, in the chat if you're interested in that. There's also a link on the Market Insights blog. So looking out to start here, first, we have this ES workspace, we call it, and this is one that's kind of interesting given that what's happening in the S&P right now. This is the hourly chart of the S&P 500, and so this is the S&P 500 futures. And as I look at this now, what's interesting is there was an early kind of signal where it went to an overbought condition, and that was right at the open. And then when we kind of dropped down, it gave something of a signal of a buy signal, and it did try and rally off of that. So what we see is when it goes to an oversold condition and the 50-hour moving average is rising, that's a potential buy signal, and we got to bounce on that as you'd expect. So that strategy worked at this point in time, but now we're in a situation where we are setting up for some things on the daily chart that are not as ideal. And I want to just kind of mention we have this MTES workspace. I'm also going to bring up my MT breadth workspace. Now, remember, these are available to you guys if you go to the top of the blog and you go to the zip file that is included in here, and you can actually see um, the there's going to be an ELD, a series of ELDs in there. Those ELDs have indicators and studies. Once you load those into your TradeStation platform, then you can use some of these workspaces that I'm giving you guys. And I'm going to go to my MT breadth workspace, which is one of my favorites because it allows you to see kind of the internals of a bunch of the key um, indexes. So I think right now it's interesting that this worked. The MTES, the signals on that one are designed for kind of hourly trading, intraday trading of the S&P futures. And so I want to mention that it did give a correct signal early, and now it's a point where um, I think that it's not giving much of anything on this hourly chart. There is a support line across here that, this is kind of the low from Friday of last week. And now we're kind of breaking under it. And so now the question is, I think this is something we have to be careful of to see if this does turn into some kind of false breakout. My sense has been more that this has a situation where with the momentum of the market is relatively strong. And When I prepared this blog post last night, I'm going to bring up this chart. I did not expect the PMI number to have much of an impact on sentiment. Sometimes these things come out of left field, and so this is what I was looking at, which is essentially, a price pattern similar to what we had back here. You get a really strong thrust of price, and then tight consolidation, and then continuation. That's what I was focused on coming into this webinar. But it's also a possibility right here where that's not what's happening, and then we have to recognize that. So this is kind of unfolding as we speak. So I want to be clear that this was something that um, it's happening now, and we don't just stick to something that we saw at one point yesterday. I think it's important to realize now that we are getting a different kind of signal, with a bearish outside day developing on the S&P 500. And also, one of the things that stands out to me is the fact that this is our breadth workspace. But I'm going to bring up this thing which I use on TradingView sometimes, and what catches my attention here is the VIX. And one of the things we did. So if you look here at the main points we made coming in on the S&P itself, was that the price action was potentially similar to November, but then at the same time the VIX had been kind of like had stayed under 12, and the S&P made a new weekly closing high. Now, one of the things we had noticed before was that when the index makes weekly closing highs, like for example, right here, on the Nasdaq, you there's been a pattern in this market for the last 6 to 8 months at least for continuation to come after that. So if you look here in the Nasdaq at this point in November, made that new high, sat and lurked for a little bit, and then continued. So this might be what we get now in the S&P. It might be that we made a new that was our new weekly high. This is the weekly chart of the S&P now over on TradingView. But the thing is that this now is a new weekly high. But then the question is, does it sit and consolidate for a week or two and then continue, or does the overall, does this kind of market top like we had last July? Because if you went back to last July right here in the weekly, now we turn this into a daily chart. What's interesting is that we also had there a bearish outside day on a strong GDP report. The market lingered for a few days and then it moved lower. So what's interesting here is, we also had here a bearish outside day with lingering and then continuation to the downside. Now, if you're curious about this, I'm going to just quickly bring up just a new chart of the S&P 500 and show you a few things that are on the TradeStation platform. We go to apps and we go to chart analysis. And here we look at the S&P 500. Um, if you want to see, for example, outside candles right off the bat, well, just you might not know how to do this. So I go to studies, add study. I go to show me's. And outside candles, I mean, called it show me. And the difference between a show me and an indicator is that a show me only appears when something happens. So go to outside bar. By default, it gives you a purple dot. I like a white cross because to me, it's easier to see. So I change that to white, make it a cross, make it a little bit bigger. And you can see here, that's an outside. So these are outside candles. Um, anyway, so that's how you can see that. Um, a show me only appears when something happens. So like a moving average will always appear, but something like a show me will not, because only when the event, in this case an outside candle, occurs will it appear. So it shows me, shows you when it happens. So but now the VIX. So if we look at the VIX here, this is a really big kind of level down on the VIX when we ended last week under 12. And the question now is like, we have to wonder, is this a case where the VIX has actually kind of bottomed? I did not expect to have this kind of PMI number have really much importance at all. And, the Fed has given the sense that they're not at a point where they plan to be hiking anymore. The market was more or less just kind of accepting those things. We also have some of the natural kind of dynamics of the market here that we're entering a period where there's not a whole lot really going on. We go in Memorial Day next week, and then we basically have a market that is kind of drifting until a big series of events in the middle of June. The next meeting in June, I think it's on June 14th. We have the Fed meeting. Well, first we have the CPI in the morning, and then we have the Fed meeting in the afternoon with a new dot plot. So in some ways, we now have this mega event on the calendar. We don't have a lot more earnings now that Nvidia is in the rearview mirror. A lot of those things are kind of in the rearview mirror. Now we do have the other event of Apple's Worldwide Developer Conference, which is they're expected to release new iPhone with AI capability on June 10th. That's kind of the unexpected, the unofficial whisper that we're getting on that. But the thing now is we have this kind of gap of time with Memorial Day, and we have data today. Also, we had today the jobless claims were lower than expected. So those things together kind of create a situation where the worries about interest rates is coming back. And the thing is, when you're at an all-time high like this, you get to that spot where people are kind of like, you know what, the holiday's coming up, and do I want to be, adding new money at this point in time? And I think that's really the issue. I think when you throw the PMI data we had on top of S&P, it was the highest PMI data from S&P Global since April of 2022. They also said prices are increasing. And so again, we continue to see that sort of, inflationary, story coming out of that. I think there have been some other things developing that I'm going to get to in the rundown, but that's essentially what's coming together now. I wanted to actually quickly show you how I built this chart because um, even if conditions might have changed, it has some interesting sort of indicators on it that I wanted to share. So the first thing is what we have is we have moving averages on there. We have two simple moving averages, and then we also have my indicator called MA speed. So I'm going to do is I'm going to go to first. Let's put it back to the S&P 500, and then I'm going to go to studies add study. I'm going to go to moving average two lines, and then I'm going to also go to MA speed. MA speed is one of the indicators that we give you guys for it's in the what do you call it? It's in the zip file, and it's also used in the MTES custom workspace that we just showed you. In fact, the MT over here, it is this line down here, and it basically shows you the speed of the 50-hour moving average. It's smooth, and it's one of the indicators we use on this one. So now it's on the S&P 500. Now, what this is this is now showing us I believe it defaults to the 50 MA. I'm going to change it to the 10 MA, and I'm going to change the length to 1. So that way it's just going to track. And then what I'm going to do is I'm going to go to style, and I'm going to make the lines thicker, and I'm going to change the input to 10. And so now you can see the MA speed is showing these big thrusts. You can see when it makes these big kind of price thrusts to the upside, that those are what it means is I'm going to also now change this to the 50, to the 10, the slow, and the 50. And this is an interesting way you can just quickly build this analysis, which I have found in the past that the 10-day simple moving average I have found to be a useful indicator for the S&P 500. And that is what we're showing you here. I'll make them a little bit thicker as well by clicking on the Style tab. Okay, so now we basically have this chart. And so basically here, we can see that when we get these price thrusts, when prices rally hard, you get the MA speed moves in a certain direction here and it jumps up, which means that the 10-day moving average really accelerated upward. And historically, once you get that run up, you don't get a drop after it quickly. You get, if anything, a period of tight consolidation and then a period of continuation. So I think right now that's kind of the working assumption that I have, I kind of had coming in here. And when I look at the overall indicators, one thing I have found is I don't believe that single day candles have been enormously useful on the index. Um, we do have some bearish outside candles that have definitely had an impact, but I also think that when you consider the fact that we're at this kind of high, I also think that this is an S&P PMI report. This is not CPI from the government. This is not a Fed meeting. This is not a GDP report. This is a single industry report that almost never moves the market. So I think it's important to realize that about this report from S&P Global. I mean, I think S&P Global is nice and all, and they've had some good leading indicators. However, I think what to realize is they are they're not CPI. They're not a major government number. It kind of shocked people, I think, a little bit today. So I just think we have to keep this in perspective and realize that we still have some things here that could suggest that we still have something of a bullish short-term trend. And so I wanted to just kind of point it out. That's how I built this chart. So as I look at this overall, now let's take a look at some of the other things that were coming up. What's interesting to me is we go through and we look, for example, at Nvidia. I mean, everything about it was confirmed strength in AI. And what's interesting is we have talked about this idea of strategic actions as being one of the seven key catalysts of why stocks move. We if you click on this, it goes through to a previous one of our webinars when we catalog these seven catalysts for stock movement. And I just find these are an interesting sort of concept to work within, and they're ranked essentially in the order of prevalence. Things like volumes are just the idea of business growing quickly, selling more, doing more business overall, and then we break down into things like margins and macro trends. But strategic actions have been a growing catalyst for large cap technology companies. We saw it. I think it was Google. Did Google do a dividend? It was one of those guys, but we had Meta do the dividend. Now we have, this giant buyback that Apple did. All of these are strategic actions when they basically are doing financial engineering or some kind of engineering that doesn't change their business model. It's when they do things like buy back stock or split stock or do a dividend or do an M&A or break up their businesses doing like spin-offs or something. These are different kinds of financial engineering, and they have been lucrative for large cap tech. Historically, big tech companies don't do them very much, at least not since the 1990s when we used to have lots of stock splits. But now they've been doing it ever since the bottom in early 2023. They've been doing this a lot. And then Nvidia did that as well by announcing a stock split that I think will take effect the first week of June. But so that's a big thing. So anyway, I want to just point out that we continue to see this trend in large cap tech, and it makes me kind of think here when we look at what is coming up. I mentioned the situation with Apple. When we look at something like Apple coming up, I think it's important to realize that these are major companies that have lots of money, and there's a lot of things that they can do. There's a lot of mechanisms that they have for supporting their stock price. And so I think it's important to realize with this Apple event coming up, and we have this stock that this had this, this was a rally on the earnings, and here we have kind of a pullback to the 8-day exponential moving average. It has been running, but if people look at this now, this is the high from the earnings report that it's pulling back toward that high. It's under the 8-day exponential moving average. So I mean, this could be a name where if it stabilizes tomorrow, coming out of the gate on Monday or on Tuesday after Memorial Day, it could be one of those areas where people say, you know what, Apple's pulled back. It has this conference coming up. So I think right now, when we look at a name like Apple, this could be something where there's nothing that really undoes this. And I think these are some of the opportunities people might want to be kind of thinking of. Another thing that really I have to say when I look at this, that if you look at names like Amazon and Meta here, I mean, they are just very tight and doing very little. And, in many ways, I think people might want to kind of watch to see how these resolve. My suspicion is that the way that Amazon and Meta resolve their price action in the next day or two could determine the direction of the market. And I think the thing is, especially with a name like Amazon, it's basically just you have this downward pressure. And if you see the way a lot of the big tech names have behaved, what they have often done is they just kind of grind down, and then at a pit of kind of despair and negativity, they just start coming to life again. That in many ways is what happened. I remember back here at the beginning of the year, um, there's been other moments. Amazon maybe is not one of them, but there's been other times when things like the overall NASDAQ, well, it'll just kind of grind down on negativity and then just start rallying. And I think we have to realize here is that, something like Amazon and Meta don't have continuation to the downside, and this period of kind of selling that we have now, if it starts to fade, these are names that could have some potential here. So they don't have any good confirmation, and they're not giving any kind of really clear signals yet. The one thing that to me is most interesting is the fact that they are essentially just kind of holding. They're not breaking through to new lows or anything. They're just kind of holding. So I think these are areas that we want to be kind of watching. I think people want to be kind of, watching these sort of areas, because when we see this sort of despair break, then you can get the kind of um, move back in the opposite direction. I mean, right now, though, I mean, I look at the S&P, we're just, kind of pushing to new lows, and we're actually pushing back to the highs from March, the March highs. And I think this was an important thing that I've been kind of watching. So as I look at this right now, I think it's a question of, kind of recognizing this is a level where people are going to be kind of looking, and we had this gap higher on the 15th that now is kind of coming into play as potential support. So I think we have to kind of wait and see how things behave around these levels. And the question is, do we get follow through to the downside now? I think that's really the question. Does it really become a big selling event now? Or does this, because if you look at other times when these candles occurred, there was a period of consolidation before the continuation happened. That was true back here. I think this was I can't remember if this was a CPI or a GDP report. It was on April 4th, but that one was a bearish outside day, several days of continuation, and then the breakdown. And if you look back in last July, same thing. You had basically the bearish outside day with several days of consolidation and then the breakdown. So let's kind of remember the way it has behaved in the past. But I do think right now we have this potential support level from the low of May 15th. All right. So let's take a look at some of these other things that were coming through. What was interesting to me also was that Snowflake, they came out and they had some interesting sort of news about how they are doing work with NVIDIA. Now, Snowflake is one of these names that went public back in 2020, and it was a high multiple growth stock, one of your kind of classic growth names. And I'm looking at it now, and I'm just wondering to see, will we actually see this thing kind of stabilize? Again, it tried to rally hard and it got smashed down. I thought it was interesting to look at this price gap up here. I think with the market right now worried about interest rates and stuff, the sentiment is not going to be in that direction. However, I think when we look at this, this was something where um, the AI story in this could very well be, you know, really starting to get momentum if you look at the most recent numbers. So I think again, this is something where today's price action is big and aggressive and frightening, but at the same time, we have to kind of recognize this company had good results. They tried to rally initially, and this might be something where people want to be kind of watching and seeing if it stabilizes, and looking also for this one to hold potentially maybe the bottom of the Keltner channel. Um, Again, the question here is really not about Snowflake. It's about the overall market. If the S&P wants to hold these highs, these highs from back here, then names like this could have some traction in the coming. People might look for potential kind of bounces in these in next week and stuff. So I want to just mention that one. I want to just say that the price action here has been, kind of a little bit more bearish than I expected coming in. So you have to kind of always step back and just kind of figure out if you're missing something. And right now, I don't think I'm missing anything else, but it is possible there's some other story out there that I'm not aware of. I think you always just have to realize that sometimes things kind of do emerge out of nowhere. We did have this sort of thing also. I'm just going to go down the things that I had kind of prepared before because I thought it was interesting. Was it basically we did an idea on TradingView about First Solar about a month ago, and this was a name that basically we had seen down here how it was coming off these lows, and this was one where um, basically it's like the American solar company. It doesn't have all the Chinese products and things that have issues with tariffs or anything like that. It's one of these companies that people viewed as the kind of the domestic play for solar energy. And I thought this was very interesting to see this kind of breakout. And I do want to mention that one thing that it looked like to me coming into today was that the market seemed to be going back to what it was in 2021, where we basically saw smaller areas of growth starting to come to life. And it was things like solar energy, Chinese stocks, the Chinese internet stocks, all of those were outperforming back at that point in time. And then we got in the late 2021, it turned to things like energy and some of the kind of those sort of areas of the market, things like financials and stuff started doing better. My suspicion coming into today was that that is the kind of market that it looked like we were going back toward. So if you look at our key ETFs here, and you look at the price performance, say in the last, you know, 10 days, you can see that the solar energy was outperforming. It's interesting that on a year to date, it's negative, but it was really outperforming the last 2 weeks and the last month. Semiconductors, same sort of way, but also look at software. Software was starting to outperform. Now, software has been a real underperformer most of this year. This is the IGV. And the thing about software is that it's not a cyclical. It's a relatively high multiple kind of area, and to see this starting to outperform as well. These things, based on what we saw on radar screen, were starting to give the impression that we were shifting back toward a growth market and away from the overall cyclical market. And so that was the kind of thing that was starting to come together that I was looking at when I prepared yesterday. And now we just have to see whether or not that remains the case, or whether or not there's maybe a new narrative now of a more inflationary environment or a more hawkish environment taking over. All right. So then look at these things. What's also interesting is there's been some real data here showing weakness in the overall housing market, which has the potential for an inflation for some positive news on inflation. One of the things that I had noticed, and I've noticed there's certain companies that you'll sometimes see are kind of like the bellwethers for an industry, and the BLDR Builders First Source is one of the leading, it's one of the outperforming stocks in the housing industry. They basically had strong data, um, um, some really strong numbers that got them added to the S&P 500. They were one of the huge outperformers, with this move in the housing industry, and they got added to the S&P 500. But what's really interesting was this last earnings report, they just got slammed. And what was interesting to me is when I saw that, I was actually wondering, should we start, looking at things in the housing industry? And when I saw this price action, it really gave me the sense that there's people who are actually now abandoning ship on the housing trade. And I think when you look at the different home builders here, the housing ETFs and stuff, this was something that had a really strong move, in some ways, coming out of late 2022 when people started to get more confident, and then we had the rally coming out of last fall. But now a lot of the things happening in the housing industry to me don't look nearly as positive. And what's interesting is that if you look today, we have it on our rundown. You basically had existing home sales missed, and then what was interesting was they said supply is now rising. So the amount of inventory available for sale as a percentage of monthly sales is now increasing from 3.2 months to 3.5 months. This guy from Refkin, he's the CEO. His name is Refkin. He's the CEO of Compass, which is a real estate, some kind of their realtor there. This is a ticker COMP. But anyway, he was telling CNBC that there is now more sellers and buyers, and he said they have the most price drops in at least 10 years of the data that he's tracking. Today we had more data. We had April new home sales were down 4.7%, which was more than twice the expected drop. The median price is starting to go down. So what's interesting now is we've kind of said all along that one of the things that will be interesting is that when people start having more listings and the market starts getting active, what will happen is that people will start cutting prices to move their houses. And it now seems to be happening. When you start to see the inventory going up and you start to see the evidence of prices coming down, that's a potentially good sign on the real estate, or on the shelter component of CPI. So it's interesting to me here is I think we could be at a spot where we're starting to see some of the inflationary things just when people start to throw in the towel, they actually could be starting to get better. And now again, this is not something that's in the CPI yet, but these are, I think, things that are building in the background that people are gonna, you know, not look past. I mean, today there's a big shock and the market's hammered. However, these things are kind of building in the background. So the housing data was interesting. Also, energy, the inventories were higher than expected. There's an interesting article from Reuters back on the 20th that looked at the internals of the energy market, of the pricing of different kinds of Brent crude and stuff like that. Now, I'm not an expert on energy to that level, but I thought it was pretty interesting because, um, you know, these energy is one of the key drivers, obviously, of prices, but at the same time, we've seen the weakness in gasoline prices. Biden is putting more gasoline into supply, and so now, if we look at crude oil, for example, if you look at the price action on this, you know, it looks like it's pretty much begun a downtrend. And so I think this is interesting here that again, if we see the downward pressure in energy, that's going to be something else that can potentially blunt the pain of higher inflation. People are going to be looking out and seeing that strength, in housing. So and seeing the potential weakness in energy. There were multiple stories. There's a story today that Russia is exceeding its oil production capacity. And so I think that some of the things, if you kind of look around at some of the news recently in the energy space, are actually also giving some reason for potential hope. Now, speaking of energy, I want to tell you that over at TradeStation, we actually have. If you go to our main page on TradeStation.com and you go to our pricing and you go to futures margins rates, we have lowered the intraday margin rate for crude oil to 25%, on gasoline and heating oil. If you look down these, you can see um, they're under energy. So anyway, I just wanted to tell you that it's pretty interesting. You can see the heating oil, gasoline, and crude. So lower margin rates. Want to let you guys know about that. It's a pretty interesting thing if you trade energy futures. That's one of the things that we're doing now at TradeStation, and we're going to have more details on that after Memorial Day. But it's on our website now. Wanted to let everyone know. Okay, so some of the other things that was just kind of interesting when you look at the different strategists. And one of the things that is interesting, so first of all, Ed Yardeni, he was just saying S&P 8,000 by the year 2030. And then one of the things, though, what was interesting to me was that Mike Wilson, I mean, maybe this is a reason I should have been bearish, because Mike Wilson raised his price target. So I mean, I don't know, this was the guy who's just an uber bear, always negative, but then he raised his price target in the S&P 500. So I don't know, maybe that was a bad sign. Anyway, it's kind of interesting. Goldman Sachs, though, said that the Chinese stocks may have more kind of opportunity. I thought it was interesting because we saw, and we had talked about at the time, like KWEB, the Chinese internet, ETF had this big kind of rally off the lows. And it's interesting to me also that this might be a situation where if we think by weeks, come Monday, let this kind of, people might let this bearish momentum play out this week, but you're looking at something here where, um, you know, the Chinese are now getting friendly again to their markets. It's not just about Biden doing tariffs and Trump, if he comes back or Biden stays. There's a sense that the American political establishment has moved towards tariffs on Chinese stuff. But in my view, I think we have to remember the real pain in the Chinese stocks was not because of anything the Americans did. It was because of what the Chinese did. They basically blew up their own market. And G really started cracking down in early 2021 and really hammered, the Chinese stocks, with a bunch of different anti kind of market moves. But if you look ever since mid-April, that tide has turned, and now the Chinese are far more market friendly. They want to support the stock market. So I think right now this is something that, as this pulls back, this is an area where I might be looking for things that are potential ideas that we'll be throwing up on TradingView or things like that. I will mention that Alibaba, kind of pulling back here. This is potentially kind of interesting. I think again, it went way above its Keltner channel. Now it's getting back down to like the 21-day exponential. And, again, things like this, when they knife down like this, rushing to buy them is usually a good way to be frustrated, to either lose money or at best um, endure a lot of volatility until the bounce comes. But again, this is Thursday, and then we come back next week. People might say, you know what? These things have pulled back. It's a potential opportunity. So I want to point that out. To me, the things that really, kind of caught my attention the most here is the pullback in these Chinese names. All right. So the S&P right now is trying to stabilize at that level, right around 52.65, the high from March 28th. Now it's interesting. The other one that was interesting to me that had kind of I noticed was JD. JD kind of had this rally and is kind of pulling back here. So again, be interesting to look at JD down at this like 3070 level. You see this gap higher, the low of that day is a potential level. That's probably also going to be a weekly low. So, those are some of the levels. We'll also be at that point be getting near that the bottom of that Keltner channel. So these are some of the things again. Today's Thursday, but by next week, these might be some areas where people think about coming back to these. Um, The thing I will just say, I think that's interesting about the inflationary things I cited earlier is that, energy and housing both seem to have, you know, their own fundamentals and their own dynamics now working in a potentially deflationary direction. So I think that's interesting. We continue to see the inflation in services, in some of these other, like the PMI people, they said that the prices and stuff going higher in today's report for May. However, I think it's important to realize that the situation in energy is, something that has its own dynamic and it's not just based on the American economy. So to see what's happening in energy and to see what's happening in housing, those are things that now could actually become, increasingly positive as they kind of build over time. I mean, I would just add that if the Russians are in fact exceeding the OPEC production, and the other thing, I mean, just, situation in the Middle East, it continues to be, you know, very just, geopolitically and all these other things about it, it's tricky. But the thing is that it's not turning into a worse thing. It's not escalating. And that's a situation as well where it's hard to really see at this point in time anything that really turns and drives energy higher again. So I think these are bigger forces that could last for months into the future. And if that remains the case, it is something that will ultimately be more positive for the inflationary situation. So I think we have to realize that those are lingering in the background now. We're not in a situation like we were in 2021 when energy inventories were tight and we had all-time lows and energy had momentum to the upside. We could be at a spot here where the overall surge in commodities is starting to kind of abate and fade. I think it's important just to realize that is that we are in a bull market for stocks. And I say that because we had an all-time high today. We've broken out to new highs. Crude oil has not hit an all-time high in a long time. Copper, did hit, I think it did hit an all-time high. But I mean, again, it didn't hold it. When I really look at this here, I think we just have to realize is that structurally here, we're in a bull market for stocks. We're not really in a bull market for commodities. A lot of people want to say it, but the fact is that we've had a commodity surge. And if that fades, then they tend to break. And if you look at things like the price action in cocoa and other things, or a lot of those things have actually broken now. So um, just kind of think about that here is that we are in a spot where we could have more of a lasting negativity in energy and housing prices, and that is a positive potentially for equities. All right, so I mentioned the thing in solar. There were two names in solar. This company, NXT, is one that I want to mention. And this was one that doesn't have as much attention, but it's like not a very big company, but if the solar thing is coming together, and I think it's important to realize the election year and everything else, this is an issue where there could be, if there's, who's going to benefit from the election cycle. Usually politicians like to beat up on stuff like pharma and certain industries like that. But an industry that they have historically, at least recently, not beaten up on, it's been energy. I mean, it's been clean energy. And so this NXT is a solar energy stock. I think they make some kind of devices that manage solar panels or something, or point solar panels at the sun or something like that. But the thing is this is a company that has had strong earnings, and I want to just kind of point this one out because it has benefited from this recent rally in energy prices. It's also important to realize that the AI thing puts a focus now on, oh my God, we have all this need for energy, but at the same time, we're trying to have clean energy. We're trying to have, electric cars. So it's going to create this focus on, and it has so far created a focus on the nuclear utilities like CEG, NRG. These have been the names that have moved on this already on the AI demand for clean energy. but then it's not very hard to see how that also extends to solar names. And so I want to put out that name on people's list, NXT. Okay. Now, I want to point out a few things that kind of popped out to me because I was looking at some different indexes over here, and I want to just kind of sometimes I look at the big kind of sectors, and after this, we're going to look at some potential things in the options market. But I want to look at these sectors using the big sector funds. I'm looking at the XLI here in TradingView, and I marked these up on TradingView, so I want to just kind of show them to you here. But what's interesting in my book is that the XLI is, in a spot here where it could be kind of range bound. So what's interesting is you look on the weekly, it broke out to new highs back here in December. But now if you look, it basically is trapped. So if you look at the S&P 500, the S&P 500, as we discussed, broke above its March high, above that March high. Look at just trying to hold that. XLI is not. So this is something now where if it doesn't go up, then what it's in a spot where it's in a range, and when things are in ranges, they very often end up hitting the extremes of the range. And so I'm looking at this now as a spot here where people might be looking for XLI and for the industrials to move sideways. Look at well, first of all, Boeing today had more bad news. And I think this is interesting. I think they cut their free cash flow forecast. I have to say, I mean, to me, you know, I'm not an expert in aerospace, but Boeing has a lot of problems. And the other thing that's interesting is that, a big customer of Boeing is China. And the Russians recently came out with a new like jumbo jet of some kind. I think the thing is when you look at the relationship between Russia and China and things, you have to wonder what happens if the Chinese, say, hey, we want to start using these new Russian planes. I mean, things like that will take a long time to take effect, but if they do, that's something that's a problem. So I think right now Boeing is one of these cases where you have a company that has had a lot of product problems, and there's a lot of things that there's a lot of good sentiment and a lot of positive assumptions built into the stock about their position in the world and everything else. But they've now, kind of damaged that reputation in a way where, I just think I'm just looking at Boeing here as a name that, it's like Intel. It's they seem to have spent a decade with bad management, bad, managing of their products and everything else. And it's not clear when or if they will ever be able to fix that. So I just think that the news in Boeing remains, very, very bad. Now, Caterpillar was interesting to me because this is just a simple bad earnings report they had back here. But what's interesting here is you look at the way it went up and kind of held that level. So to me, I think a name like Caterpillar here could be in a spot where people looking to the kind of a channel like this, it could be a spot where people could be potentially looking at a name like Caterpillar. So I wanted to kind of point that out because, like we said, the XLI failed to break out, and there's a potential for a sideways move here. Like I said, my sense coming into this webinar was that are in a period now where the cyclicals are not going to do as well. It seemed to be this switch to growth, and the cyclical things like energy, bad, and now the this situation with industrials failing to break out, the bad news in a name like Caterpillar, ongoing bad news in a name like Boeing. So these are all value cyclical names. And so when you look at that, most of these names have been struggling. And then the growth names, obviously like semiconductors and stuff, have been outperforming. So it's interesting, I think, just to kind of recognize that this dynamic appears to be, it was coming together, but it could be a situation where, let's say the market actually does stall here and work lower. The question then becomes what performs more to the downside? What gives the cleaner downside trades? And then people might be saying, you know what? A name like Caterpillar here could be that name. Also, JP Morgan, we did a trading view idea on this. This was an interesting one. You guys might want to check out the idea. If you look here in the rundown and you click on trading view ideas, you'll actually see that we did this and we basically looked at the reversal pattern in this. But essentially what we have is we have a large bearish outside day, false breakout. And the question again is you have a low from mid-April. Does that become a point of reference? And now also, there's a lot of interesting news on the stock with them saying they don't want to buy back their stock, stuff like that. Jamie Dimon apparently starting to think about retirement. But you had a bad earnings report here. The stock gap lower, and then it ran into the investor day. But it's interesting. Look on like a short-term 5-minute chart of this thing. Where was the high? I mean, the high was basically on Monday morning. People tried to drive it to new highs, and then within the first couple of minutes of Monday, what by 9:40 it was hitting lows. It was hitting. It was red. It was green early and went red, and it has stayed red since then. And that high, around 206, that was the high, all-time high. It occurred Monday morning, a market order Monday. Where people are like, oh, I think this buy, this sounds like a great thing. And this is what you see when you see a high early, especially on a Monday, and a reversal. It can be a pretty strong reversal pattern. It was a 5-minute chart, but that bearish outside day, that early selling turned into a bearish outside day, and it's also turning into, a bearish outside week on JP Morgan. So I wanted to highlight that. And the other thing I'll mention, you have to be careful of, is the S&P today had its high early, and now it's a bearish outside day. So I mean, there are some sort of patterns here, and it could be possible here that the price action shifts to the short, shifts toward the selling side, and in that case, there are some names that are popping up here. These things like Caterpillar, J.P. Morgan. I will also mention that some of the leverage cyclicals, some of the cruise ships and names like that, might potentially see some follow through to the downside. But I mentioned the XLI, but look at XLF here on this chart. Also, you can also see this was the all-time high that it kind of got, and it just kind of stuck here. But again, this could be something where people look for some chopping and filling for a while. And for people looking to add to the financials, they again, very similar to JP Morgan, the mid-April lows might be the place where the money where people come in. We talked about materials, XLB. Now, to me, this is one that is potentially giving a pretty strong negative signal. Lower high, and the lower high on the weekly chart matches the all-time high from back here in January of 2022. So what do we have? We basically have a false breakout, lower high, and then the question is, do we get a lower low? Does the materials index walk down this channel? That's, I think, a question we want to be kind of on guard for. The home builders, I mentioned this, but if you just look at the ITB here, also this channel taking shape on the weekly chart. Um, Lower high. I mean, here you have something. If you look at this one I think is, look, it's under its 50-day moving average when the S&P is above its 50-day moving average. So again, this is an area here where there's been a lot of hopium in the housing area, hoping for rate cuts and everything else. So I think it's important. Now take a look at XLE. XLE is pretty interesting because this is, look on a long-term weekly chart of this. This is a slightly lower high than it made back in 2014. And now the question is, again, do we look for points of reference on the weekly chart? And does that basically mean something like the January low back closer to 80? So I think right here, these are just some of the things that are kind of jumping to mind where if this market wants to be more bearish, these might be more some of the areas where people look. Now, IWM and the Russell small caps is also kind of interesting because, again, it made a lower high. So I think right now we're in a situation on this one where, again, those not quite mid-April, but April 19th, the level around 190, 191 could become a point of reference in a place where people start to look. So this is something to think about. Like I said, the overall S&P has that bullish sort of momentum of that fast rising 10-day moving average. It's trying to hold the highs from last March. The question is, if this does turn into a top here, where are those areas that already have the established weakness that could go from bad to worse? And those are some of the ones that jumped out to me. Things like industrials, financials, energy, materials. Those are the areas. So it's interesting to me. Now I'm going to look at some potential options, things that kind of popped up on my radar. And so I'm going to go to Apps Option Station Pro. But I will remind people here that I do think we have to realize is that the PMI number, it's not normally a market moving number. I think it's important to realize that. It's probably the first number we get for May. Consumer sentiment comes first for May, and then we also get, let me go over here. We get consumer sentiment, and we get Then we get the PMI for the current month of May. Other stuff you have to wait until the following month to get it. So what was interesting to me was Freeport. This was one that I had been actually on the long side for a bit here, and we had been talking about it coming out of here. We I'm out of it. I have no position or anything in Freeport now, so that's what I'm talking about. The thing here is it had this here, and then it had the nice continuation. But I think now what's interesting is it a name like this? Again, you have references from spots in April, and the thing is you had I don't have it on this chart, but if I put in volume, this was a high volume drop we had yesterday, and so for me here, this is again something where um, the character seems to have changed yesterday. Yesterday, people were selling materials. A lot of these names, silver got slammed. The reversal patterns, there was no really clear reversal pattern on them. It was just a lot of selling, and the drops were relatively violent for no good reason. In some ways, you look at the price action as this kind of just sneaking higher, and then suddenly people the selling steps in. However, I want to just kind of point this out. So let's take a look here at the options on this. If we look at something into next week, the 31st of May, a person could look at something here, and if like I was looking earlier at something like the a put spread, a person might consider something like, if they were to click on the ask like the 50s here, and then hold down control and go to the 48s, you basically have a spread that is $2 wide going for 36 cents. So a position like that could potentially be several 100% if it closes at 48 or lower. So where's 48? It's right here. It's basically this low from May 2nd. So, this is something for me that was kind of grabbing my attention. If we have this kind of follow through to the downside in some of these names, something like Freeport here, a spread like this, a person might say, this spread has a risk reward of potential $2 profit for $36, 36-cent debit. That's something that kind of jumped out of my mind. The other ones that I've been looking at, a lot of them were more kind of to the upside. And, maybe the ones that just need a little bit of a delay. But I think it's interesting to think about when you look at a name like Apple here. Remember, we have this expiration of June 14th that people might be looking for a name like Apple. So the thing is, if the market wants to stabilize and things kind of come back to life, you know, wait, sorry, I have the wrong symbol there. I want to change it to my cyan symbol linking. There we go to Apple. So So for Apple, what was kind of grabbing my attention was people could potentially be looking for a move back toward kind of 200. But I think what's interesting here is even with this pullback, you have to kind of see where things stand at the time, and the market is kind of continuing lower back under that March high. But what's interesting here in a name like Apple is the you know I was looking at if a person wants to see it go back to the high around 200, something like a call spread of the 195 to the 200 costs 70 cents roughly, 73 cents. So what's interesting is that's a potential $5 return for the stock going back to its old high for a 73-cent debit. So I think that that's another sort of thing where we have this event coming up, and the question you know, is Apple, which has a history of delivering, going to fail? I mean, that's I think the question. A lot of people are going to step back and they say, "Wait a second, all right? So, you know, Alphabet got its act together. Facebook got its act together last year. Nvidia has been crushing it. Netflix has managed to pull together their new business model. And here's Apple stuck below all-time highs, and they're about to release an iPhone, which is arguably the most successful product in all of history. They're going to release an iPhone that has AI. So, I mean, I think when people step back and they say, is Apple going to fail on this front? Is it going to not work? Or are they going to deliver? Remember, Apple is a company that can hire anybody and pay them anything. They have, such deep pockets. Are they going to fail? And I think that's a spot where when this sort of selling pressure, if it does kind of ease in a day or two, people might take a step back and say, you know, do I want to not have an upside position in Apple going into an event like this? And I think that might be the way that people are thinking, not today, but in a few days. And in that case, something like a vertical spread is a way for people to consider managing risk on a move like that. And the key thing about it, and the thing that's so interesting about options is we have a very clear time frame. We know that it's going to be on June 10th, and we have an expiration for that week, the week of June 14th. So something like something along the lines of like a 195 200, or maybe a 190 195 call spread, depending on where the stock settles, from this current move, is something that people want to be thinking about. As I look at other things, let's take a look at Caterpillar, because this was one that, to me, if we see, for example, a move back to 330, what would a 340, 330 put spread look like in a name like this? Another nice thing about this is we can see earnings. So the earnings are going to be here. Well, it's far enough away from earnings. But if you were to look at something just for, like, the standard monthlies, which is the 21st of June, in a name like this, a person who'd say, this name I think is bearish. So let's say it goes lower. I just for purely hypothetical educational purposes, if we were to say, potential downside, a person could look here at something to 345, 340, for example. Let's look at that one. You click on the ask and then go to the 340, hold down control and click on the bid. And now we're going to see that $5 wide spread is $1.80. So if they're looking for something with more risk reward, they could just say, you know what, I want to click here on this one instead, and this. And now I'm looking at a move down to 337. That's $1.58 or $1.60, bid ask. So these are some of the things that people might be looking at. But I think it's interesting to look here at Caterpillar, that we have the lower high, and from my perspective, a move, in Caterpillar back down to 330 might be something people could be looking for. In this webinar back, I remember it was in early April, we had identified Dollar Tree. I think we had talked about the 130, 120 put spread, and when the stock was up here, we did this webinar. And so that was kind of interesting to me, that, we kind of see the gap lower, this attempt to stabilize, and then continuation. And Caterpillar here, I think, is in that boat where the market was trending higher and it fought higher. And now, if the market is less agreeable and the overall, sentiment is more bearish, then names like this that already have more structure to the downside, these could be the areas that have, the stronger follow through to the downside than people just looking for the big tech names to the downside. So I want to kind of emphasize that if we are entering a period of kind of weakness, and like I said, you have to take a look at the calendar and look out. And what do you see here on our rundown? If you look down here at the upcoming events, we basically see Memorial Day, and then after that, we have not a lot of important data. I mean, even things like PCE, I'm not sure. I mean, we're kind of in a drift of data until that June 14th, when we basically have that mega day of CPI and Fed. And the question is, I think it's out there, and we're entering this dead period of time. So I think right now, the sentiment that I'm seeing kind of come together might be more along the lines of people saying, um, all the stuff that's really able to drive the market higher is kind of priced in for now, and things are not really terrible, but at the same time, there are more reasons to be cautious. And as we enter a holiday weekend and other things like that, maybe it's more of a spot here where people are not going to be putting new capital to work, and it could just enter a period of time of kind of consolidation, like we had around this time 12 months ago. If you look back, that's exactly what happened this time last year. Or it could be a period of, what, inflation's running out of control. As I mentioned earlier, there are reasons maybe to be more optimistic that inflation is actually coming under control. Maybe we enter a period of time like we had on the S&P 500 back here. I'm gonna actually go back, and then I'll be ending. Um, if we look here on the S&P and we go back to this period last year, you can basically see May was a sideways month, and then they raised the debt ceiling and the market started rallying. So this might also be a period where we could have something like that. At that time, we were trying to figure out, were things going to come together? Were they going to raise the debt ceiling? Was everything going to be okay? And then we got confirmation to the upside. So maybe now we enter a similar period of sideways movement, and we kind of, you know, maybe that's what we see in May. And then when we come up to the Fed meeting, then maybe people have the ability to have some conviction to the upside. So we will find out. But I think it's important to realize that I'm actually going to be off in June. So we'll still have some stuff on the blog, but I won't be doing this webinar. I will see you guys again on, I think, what is it? It's going to be July 11th. So hope everyone has a great Memorial Day and a great next month or so. And we'll see you again in about a month and a half. Take care. It's great to talk to everyone. See you again in a month and a half.